bring in Sreesankar, Head Institutional Equities at Prabhudas, Lilladher, who's joining in as well. Sri, morning. Thanks so much for taking the time out today. Markets in the last couple of days have been having a little bit of a tough period. Yesterday saw some bit of a technical rebound. What are you anticipating, at least in the near to the medium term?
I think it's we are moving towards the end of the year. End of the year normally sees a lot of turmoil, profit booking, various levels of scenarios like this. But this time around, we are all anticipating a Fed rate hike, and Fed rate hike to a great extent is, for all practical purposes, going to be a reality this time around. That's what we think about. So now, once it happens, how is the flows going to be to the emerging markets? If the dollar is going to continue to strengthen, what's going to happen to a large amount of emerging markets? What's going to be the growth, global growth, which is going to be the key. To my mind, it's an uncertain period. So we think that the market will be more in a trading range in the near term, between 75 to 8200 in the near term. When I say in the near term, probably we are speaking about a couple of months, to 2 to 3 months kind of scenario. That's number one. Having said that, when I look into the earnings levels itself, at the beginning of the year, our earnings estimate for FY16 year ending March 16 was, for the Nifty, was closer to 472 rupees. Now that has got reduced to around 412 rupees. Now, given that you have seen a severe earnings downgrade which is happening, and a couple of sectors which I need to specifically mention out here, which has resulted in this earnings downgrade. Metals from a profit estimates have gone down to huge loss, even in the Nifty, and automobiles, where we were expecting a 21.5% earnings growth at the beginning of the year in April, has now gone to probably a negative 1.5% kind of a scenario. So you're actually seeing certain huge movements out there, wherein the profitability has got vanished in commodity companies, especially the metals. And you're actually seeing certain changes which happens. So if we discount for the FY17 earnings that we say, which is somewhere around 499, on a 12-month rolling forward, we probably index is at around 16.4x. Your 10-year average for the index is 17.4. So if you don't see large amount of downgrades happening from in FY17 going forward, you're actually expected to see that probably we are at the bottom of the market right now. Unless emerging markets as an asset class really collapses. I think within that asset class, we still believe that India stands like a rock solid one, because your current account deficit is addressed very well, and you are one of the safest places, or one of the better places in terms of management of currency, the fiscal scenario, etc.
I know, Sri, you removed your 2016 strategy note as well. I'm going to come back and discuss that in detail, but let's get the opening quotes first. Alright, let's get the opening quotes going for you. And after seeing a little bit of a green in the pre-open, markets finding it difficult to hold on to it. 76, 78 now on your screen, and it's cut of 7 to 8 points on the Nifty. Sensex barely holding on to some bit of gain. Tata Steel up for almost 2%. Hindalco, ICICI Bank, Vedanta and Idea are some of the gainers that we're seeing in terms of trade today. But it's a weakness. ITC is down by almost 1%. M&M, Bharti, you got HCL Tech, Coal India, TCS and Reliance Industries, after a 4% rally yesterday, is finding it difficult to hold on to any sort of gains. It's a little bit of a mixed bag today in terms of the way openings panning out. You're seeing the banking counters show a mixed move as well. You got some gaining, some actually trading a little bit weak out here. Like ICICI Bank, for an instance, up, while HDFC Bank is marginally in negative. BHEL, HCL Tech, Bajaj Auto and Lupin are a couple of the other stocks that are actually trading a little bit on the weaker side, Abba, is what we're seeing. So it's been a little bit of a mixed picture today. 7674 on your on the index, and a quiet start to the trading day.
All right, so in mid-caps as well, let's just take a look, because we've had a whole host of them on the back of news that are actually moving. And remember, we saw a quick rebound in mid-caps as well yesterday. Sharon Bio, one of them, up 6.5% this morning on that news. Aurobindo continuing to see a bit of an up move as well. We've got tighten up after the RBI has allowed a higher FI limit in the counter. We've got a big block deal in Just Style coming in this morning. Let's pull that out for you. Reliance Power also seeing a bit of a block deal, so let's just see the impact on that particular counter as well. And a whole bunch of other names that will continue to be in focus. So Texmaco, for instance, is the other one that we've been tracking for you. And some of the other names as well from the mid-cap pack that are already moving on our radar this morning, including names, for instance, an Alstom T&D, a JSW, Havells maintaining its up move about 1% there on that one as well. Remember, big news yesterday and a big move for that counter that came in yesterday too. So the index overall is actually continuing to look a little better given the kind of lag that it has been seeing otherwise, but continuing its up move from yesterday so far.
All right, just pull up Reliance Power for you once again, and what we're seeing there, huge block deal taking place this morning. As far as Reliance Power is concerned, stocks trading higher by nearly 1%, nearly 2.8 crore shares exchange hands in a single block deal is what we're seeing. Just Dial also having a decent block deal this morning is what we've been tracking as far as that count is concerned. Just Dial though is up by just 0.1%. It's been a quiet start today in terms of the way the markets are panning out is what we've been seeing in terms of the way some of the counters are shaping up as well. But let's talk about a couple of the themes now. We've been in conversation with Sreesankar from Prabhudas, Lilladher, trying to understand the outlook for 2016 in terms of the markets here. Sri, one theme that's got active recently has been the auto pack. I know for a fact you've been tracking some of the large caps there quite closely as well. But what's your call going into 2016 when we talk about the auto majors?
So when we speak about the calendar year 2016, that's as good as a full year, 9 months of FY17. I think from a perspective, even let's assume that the 7th pay commission getting implemented, or even the one rank, one pension, etc., everything gets implemented. If these things get implemented, the big beneficiaries are going to be the consumption theme. The consumption theme, the automobile invariably falls into the consumption theme. And from my thought process, OROP is may not going to benefit in terms of automobiles to a great extent, because that will go towards the benefits of it will go towards retirees, for the retirees, and they probably will not be in a mood to probably spend and consume quite a lot. Consumption is normally with the young crowd, the youngsters, and for them a salary revision effectively means, or salary kicker effectively means a larger bid flow. And the rough cut estimate from the 7th pay commission is somewhere around 12,000 rupees per month for the average across. I'm talking about an average in terms of central government employees getting increased. If that gets increased, I mean, this will be various levels, but it's a rough number which comes in. It's a huge amount, closer to 1,50,000 in a year, 1,44,000, which means that you have to see the consumption pattern increasing, and within the consumption you will see the discretionary consumption plus, we talk about cars, passenger cars, mostly at entry levels I would presume, and various other things which will continue to consume. So you should start to see, in my view, a better traction, much more faster traction towards the second half of FY17. This is only a proposal which needs to get implemented, approved in the parliament, etc. But it will take time. So I would expect an FY17 to be much stronger year than FY16. That is calendar year 2016 to be much stronger.
Sri, let's talk about banks. What's your call? I mean, we've got some news today as well, but apart from that, I mean, news of course with the RBI laying down timeline for reduction in SLR. But that apart, what are your picks? Which are the majors that you're tracking currently from the banking pack? What's the kind of trend that you foresee?
See, there are a couple of things when we speak about banks. First, we like banks. The only sector that we are overweight in the entire portfolio is banks, and we are underweight metals. So why we are overweight banks? Because we strongly believe that economic recovery will be linked to the growth in the banking system and the performance in the banking system. A stronger economic growth should lead to a lot of stressed accounts at least reducing its stress, even if it doesn't, even if you don't see a significant reduction in NPS. we'll see marginal reduction in NPAs. There may be companies which are the sectors or stroke companies which are structurally doomed. So they may be in restructured accounts which will slip into NPAs. That we can't help it. So you will see an improvement in NPAs levels and the stress in the banking sector plus the growth. So we are optimistic on banks. Number one. Number two, that RBI guideline in reducing the SLR levels. No, that obviously will benefit the banks because it will lead certain liquidity into them which they can utilize it for high yields. And that's in a staged manner. And that's not an important criteria for recommendation of the banking sector. Banking sector comes from the fundamental side. And third, within the banking sector, where do you like it? And whether we like it or not, we still continue to like the private sector banking space, the new generation private sector banking space with HDFC Bank, ICICI Bank, IndusInd Bank, Kotak, Axis, etc. Within that, our preferred picks are HDFC Bank and ICICI Bank, etc.
Okay. You know, I was going through the 2016 strategy note. You've got L&T there as well, Sri. Now, this one's been interesting for a simple reason. It's had a pretty tough 2015. You've seen basically no signs of capex revival across the space. And it's not only L&T. You've got some of its peers as well that have struggled quite a bit in this calendar year. What's likely to change that you've got L&T on the radar?
L&T as a stock has underperformed for the last 12 months.
Right.
In an absolute sense and in a relative sense. So, from a point of view, it has not been the part of a topics last month at all. So we have reintroduced L&T because we believe that L&T has taken a big knock, and the negativity is already priced in. And that's the reason why we are seeing a large amount of underperformance which is coming up. Now, as things start to develop, improve, be it in terms of the defense sector, be it in terms of even the capex. And if you look at the capital spending which has been happening, the Ministry of Surface Transport probably has got 46% more increase in expenses and plan expenditure than anybody else so far in the current fiscal. So you're actually seeing a lot more of spending and various kinds of things which is happening around. You're not seeing that getting reflected down into the performance of these companies. That's why they have underperformed. So we like L&T from that infrastructure space. We also like Sadbhav and we also like Ashoka Buildcon. Stocks have done well. We like companies within the asset owners who have already found their capital that's required to fund their capex programs, and that's where we believe Sadbhav and Ashoka Buildcon also comes into the picture. So we have avoided companies which are in serious debt trouble, who doesn't have the requisite funding for funding their capex stroke BOT projects, and we have looked into those companies which have already raised the necessary resources so that their projects go on stream and they got a significant and clear cash flow in sight.
What about the mining and the metal space? Seen quite a bit of stress on these counters for the last few months, and it's been a consensus trade in terms of avoiding the metal pack. Do you see any kind of revival there? Because I'm just looking at the screen right now. Tata Steel, a couple of the non-index names as well from the mining and the metal pack are at least showing some bit of gains, is what we've been witnessing. Would you look at any selective names also from this pack?
Not at the moment. At the moment, my own belief is that because the largest producer stroke consumer of metals, China, doesn't have that kind of a growth, the incremental or the players there is probably trying to sell these things at whatever price that they can get and whatever marginal costing they can do, etc. So there is huge amount of dumping, and in exports from China has actually increased quite dramatically. So that pressure on the metal pack that we continue to see here may continue, and you may see a sharp bounce back when suddenly these things stop as well. But having said that, that sector is going to be determined by somebody else, not by the happenings within the country to a great extent, which is going to be external factors. So I don't think that we are looking into that sector with any kind of an optimism right now. We are underweight that sector, and I do not advise investors to look into that sector right now. The only exception is that Coal India that we have gotten a topic. Valuation-wise, it's looking good. The only thing is, which is probably an issue today, is an overhang of whether the supply of paper will come.
All right, fair enough. Sri, anything from the mid-cap pack that you want to leave us with today in terms of top picks?
No, we have introduced VRL Logistics into the portfolio, and we think that the logistics space, especially among the fleet operators, once the GST gets implemented, and that's a while away from now, definitely you're going to see an improved interest coming into the organized fleet operators, and this is a listed one, the largest listed one. And with over 25% ROE in a consistent basis coming in, and with a strong cash generation and low working capital, I think this stock is going to be a darling of investors going forward. So it's expensive, but we still believe that it's going to become more expensive going forward.
One more name that you've got in your portfolio for 2016 is Viatech Vabag. What's the outlook on that one? How are you reading the the potential that this company can offer?
The potential is extremely good. The only issue is that the way the implementation that we speak about in terms of infrastructure, that has taken a slight knock. So what we think is this a company which has got enough cash, it doesn't have debt, net debt is next to nothing, and effectively the kind of potential that it offers. It has been an underperformer for some time, but we think it's going to be a strong story. Some of these companies probably have underperformed over the last few months, etc. But we think that this should be used as an opportunity to buy into it for the stronger returns going forward.
All right, Sri, thanks so much for joining us this morning.
Pleasure.
Have a good day going ahead as well.